What is going on, guys? Welcome back to the free course. In this one, because again, everybody that seems to find stocks finds options and they think, well, why wouldn't we do that? If you can make more money doing options, why wouldn't you do that? There, there's always risk reward. Remember that. Sometimes, when you buy a stock, you're going to take a lot less risk than buying the option, which could end up paying you out a dramatically more amount, but with a lot greater risk. That money could go to zero, which is the worst thing we want to do. The great Warren Buffett, one of his rules is don't lose money. And I'm a big factor of that. I don't ever want to lose money. If I break even, I count that as a loss. Is that a loss? Probably not to most people, but if I break even, I count that as a loss because that means my money could have been in something else that's at least paying me a dividend and making me money. But there's that. But options, I just kind of want to go over what it is, and I'm just going to go with the definition here to kind of give you guys the straight up answer. A stock option gives an investor the right but not the obligation to buy or sell a stock an agreed upon price and data. There are two types of options: calls and puts. So puts, which is a bet that a stock will fall, and a call, which is a bet that a stock will rise. And that is the 100% basics of it. If you hear people are bullish and they want the market to go up, they're definitely buying calls or they're selling puts. Now, that may be a step above where we're at right now, but that's okay. Just remember that. And vice versa, basically, it's the opposite way. If they're bullish, they are selling calls and they are buying puts. Now, you can do both or you can do just one of those. There's multiple option strategies out there, guys. I think I've tried just about all of them. I am big on selling options because selling options allows me to use theta decay, and not a lot of you are going to know about theta decay, but theta decay, basically every option has theta. And if you go to TD Ameritrade, which I have here in the background, we can go here and we'll just pull one up, and it's not going to give you the theta here on here because it's over the weekend, but it's going to show you basically that it's going to devalue every single day that option is open. So every day it's going to lose. Say your theta is 5 cents and you're a month out, basically meaning that option expires in a month from today. Well, tomorrow it'll be 29 days. Then the next day is 28 days. And every day it decays by 5 cents. Now, could that option still go up in price? Absolutely. But if it doesn't hit the price that you think that it was going to hit, then it continues to go down and it expires useless. And if it expires useless and I sold you that option, I collect all your money and I keep it. But again, options do go up in value sometimes, and you can get some and you can flip them for pretty quick money. Again, I don't recommend trading options whatsoever unless you are selling options to other people with basically your odds become like house money. If any of you guys like to gamble or anything like that, they always say the expression is you're using house odds or you're using house money once you started winning. What I have done is I basically use house odds in order to sell options. I do that as a passive stream of income, and we will go over more of that. But that is options. I think you should be focusing on learning on more of investing. And then if you do want that other and you want to start trading and things like that, I always recommend, again, Vinny E Mini is the only way I would trade, and it's trading futures, and that is actually trading stocks in and out within minutes usually, and you make some money or you lose money, but again, he has an algo box that is absolutely insane. I tell him Mark Cox sent you. He'll walk you through everything, how it all works and everything. But if you're just here again still looking to invest, which I think most of you guys should still learn how to invest first, because again, if most of you guys have 401ks, start with learning how to not pay all the 401k fees and stuff like that, and being able to invest it yourself so you don't have to pay some stockbroker basically a percentage of all the money that you make, or not only all the money that you make, but all the money that you invest into. Because I hate to tell you guys this, or be the bearer of bad news, but if you guys have a 401k, there are a ton of fees in those 401ks. Read the fine print. know what your fees are, know what they charge you for maintaining the 401k in your investment account and all of that. Even though it may show you're making money, it may not quite be as much money as what you should be making because they are obviously taking their cut. But again, when it comes down to this video is on options. I would much rather you guys learn how to sell covered calls, and again, I will go over all of that, or selling, I can't even think of the name now. Basically, just selling puts. You can sell spreads, and that's a completely different thing. Selling spreads in order to, if you don't have the money to buy 100 shares of it, sell a spread in order to make $10 off of $100 or $200, still becomes 5 or 10%. You do that every single month. All of a sudden, now you are outperforming the market. With that being said, thank you guys for watching, and I will see you guys in the next video.